Half-year results failed to excite investors, with the share closing Thursday's trade at 29 shillings and 85 cents, gaining a paltry 0.3% compared to Wednesday's close. Julian Samboko sat down with the company's chief executive officer to dig into the company's strategy going forward and the plan to cement its private equity portfolio.
After successive exits from its investment in the beverage segment of the economy, Centum Investment is looking to channel the proceeds realized towards cementing its private equity portfolio. Centum raked in 18.6 billion shillings in net proceeds after exiting Almasi Beverages and Nairobi Bottlers, and CEO James Moria says the company's strategy for the next 5 years is anchored on high liquidity to allow strategic investments.
Today, we have a private equity portfolio with assets of about 8 billion, but we have cash of 8 billion, which has been ring-fenced for private equity. And that is for us to go through another cycle of investments.
Centum has dispelled fears that the company's exits threaten its diversified portfolio and has left investors vulnerable to concentration risk. Moria says there is opportunity for returns in the private equity space, given the state of the business environment and the repeal of the cap on lending rates.
There's opportunity because a number of companies leveraged up their balance sheets and built up capacity, which they now don't have throughput, and then they have working capital constraints. If you look now at the removal of the caps, for companies taking new debt, when the risk is totally priced in, it might be more expensive. So it means the pressure for businesses to look at their capital structure and bring in equity is only going to increase.
The group saw its net earnings surge sixfold to 6.8 billion shillings in the 6 months ended September 2019, even as the company reported a net loss of 1.6 billion shillings following a one-off impairment provision against a credit facility in Amu Power Company. Julian Samboko, NTV.